Hi everyone! This video will be about Quarry financial model of a business plan. We are business planners and we can help you to prepare your business plan or financial model in Excel. Subscribe for more videos. Please like and share to help the channel grow. If you have a business idea of starting your own business, this very simple financial model can help you to evaluate the amount of money you need to start this business. Besides, you will also be able to see the profit, payback period of your investment and profitability of your future operating activity. Of course, it will be very interesting for you to know how stable your business idea is if something happens with revenue and expenses. So now let's go through the model and I will show you what items you should pay attention to if you want to run this business. In our model, all inputs are colored in blue. Other cells are automatic. First of all, you enter the year when the projections start. Then you enter the month and year when you start your project. In your quarry, you can have up to 5 locations, each of which can have its own volume of mineral resources. Here, you can name these 5 locations. In the next column, you can specify each location's size in hectares. Each location may have some upper layer you have to go through to reach mineral resources. Here, you specify the thickness of this upper layer in meters. Then, we specify the cost of removal of upper layer in dollars per 1 cubic meter. Then, you specify the period of upper layer removal in months. Then, you specify in meters the thickness of the layer with the mineral resources. Then you enter a year volume of extraction of mineral resources in cubic meters. When the volume of mineral resources is out, you will have to recultivate this location. Here you enter the price of recultivation in dollars per square meter of this location. Also, you have to specify the duration period of recultivation in months here. Once you've entered this information, our financial business model will automatically go from one location to another, finishing extraction of mineral resources in one location and starting extraction of mineral resources in another location. Now let's move to the revenue. Here you can specify up to 3 fractions of extracted mineral resources. In this column, you can distribute 100% of extracted volume of mineral resource among these 3 fractions. Now you enter a price for each extracted fraction of mineral resources. Then you describe all direct costs per 1 cubic meter of extracted mineral resources. In the first column, you name all your direct cost items. Here, you specify each direct cost metric in which natural metrics you buy it, in tons, kilowatts, kilograms, cubic meters, and so on. Then, you specify natural consumption of direct cost item per 1 cubic meter of extracted mineral resources. Then you set up a price per 1 unit of each item of direct cost. The next column describes how often you buy each direct cost item. 1 means you buy it every month. 4 means you buy it once in 4 months. 12 means you buy it once a year. Here you can enter amount from 1 to 12. Your direct cost item may have some terms of supply. Here you can specify these terms. 0 means that you can get this item months and months without any terms of supply. 1 means that if you need this item today, you need to buy it 1 month beforehand. Then we move to fixed costs. You can name them here and specify the value for each location in dollars per month. When it's time for this or that location, this or that amount of fixed costs will be applied. The amount of fixed costs is specified monthly. The same situation happens with payroll. In this table of inputs, we specify positions, salaries of one person on each position, and amount of people on each position at each location. So now you have a variable payroll depending on what location your quarry currently is. Then you have the first part of investment plan. Here you specify investment items, a price of one investment item, and the amount of items bought. Then you enter when you invested, months before starting a business. Then you have a second part of investment plan. Green column will show you the moment when you get the first revenue. Moving to the past from the moment of starting your project, you describe the investment stage. Here, you specify what item you are going to invest in, when you invest, and how much you invest. Going ahead, you also have a depreciation table. If you have a depreciation for the investment item, you can set the depreciation status and specify the period of depreciation in months. The next block of inputs deals with taxes. You can set the tax rates and move to the cash flow statement, where you will see the results of financial modeling. Cash flow is the main statement where you see the financial efficiency of your business idea. What valuable information can you get from this table? First, you can see the total revenue, direct and fixed costs, payroll, and taxes. Second, you can see your monthly profit and cumulative cash balance. Third, one of the main things you'll see from cash flow is total amount of money you need to start the business. If you see that total financing is bigger than amount of money you have, you can add loan parameters. Amount of loan, month and year you get it, loan term in months, interest rate, and grace period for interest and body payment of the loan. After cash flow statement, we can see lines with profit and profitability. Then you can set a discount rate and look at the final financial efficiency parameters of your business idea. Now you can see the graphic illustration of your business idea. Here, you can see in monthly detail simple and discounted payback period, a loan coverage ratio, and total expenses, profit, profitability, cash balance, cumulative profit, operation profit, and loan payment. Then you have the same information done yearly. On the next Excel sheet, we have gathered yearly consolidated cash flow statement, profit loss statement, and main financial results of your business idea. Finally, you see the financial efficiency of your quarry. Is this model stable? What will happen to your business if revenue decreases or expenses rise? Now it's time to apply sensitivity analysis. Further, we have several Excel sheets where we test financial efficiency. We test the influence of such parameters as revenue, fixed and direct costs, payroll, investment, interest rate, and loan amount. How does it work? For example, let's go to the revenue sensitivity test. Here, we set the pace of increasing or decreasing the revenue. Then, we push Sense button and see when the financial efficiency will go negative. Now you see how stable this business model is. Now it's a great moment to rethink your business strategy in time before you start investing your money in business. Maybe it's a good time to return back to inputs and create a new scenario which is more financially strong. The same story goes with all other blocks of sensitivity analysis. So this was Quarry financial business model, which can help you to check quickly the vision of your future business idea. The link to download this model is below this video. If this video was useful to you, please like, share and subscribe. Should you choose to take action in your startup, we can help you with business planning and financial modeling. Let's test your business idea. Stay tuned and bye-bye.